everyone. Good day. My name is Mark Johnson. I'll be your host for another wonderful town hall where our investor community gets a chance to speak to some of the key speakers inside of companies and talk about investments, where things are going. I have the great pleasure today of introducing Trey Wasser, who's the president and CEO of Ely Gold Royalties, and also David Garofalo, who is chairman and CEO of the Gold Royalty Corporation. Welcome, gentlemen.
Welcome. Thanks, Mark. Okay. Yeah. Well, thanks everybody for tuning in to another one of the Ely Gold town halls, which is now, going to be the Ely Gold, the Gold Royalty Ely Gold town hall. We're very happy. We announced this deal early this week, and I think that this is really going to go down as one of the most significant royalty mergers in recent years, really. So I wanted to start out today for the Ely Gold shareholders to give a little bit of background and maybe address some questions that we've been seeing coming in from shareholders. And first, I'd like to just say that Ely Gold shareholders, you don't have to do anything immediately regarding this transaction. You have a few weeks to fully understand your options and decide just how you want your Ely shares treated in the transaction. We'll be posting more information. We'll be doing these calls. We have set up a hotline, and that number is in the press release today. And so you're going to have plenty of time. The record date for Ely shareholders for the meeting, we will need 66 2/3 vote to approve this at the shareholder meeting, and that will be held August 17th. So the record date, everyone who is a shareholder of record as of July 14th will be able to vote. Now, as far as the election of cash and stock, you won't have to make that election until August 12th, 3 business days before the vote. So I'm going to get into the actual transaction in a second, but we've got a couple slides that can maybe hopefully will help explain this. It is a not call it not exactly straightforward transaction, but there are reasons for that. We will be with Gold Royalty preparing a management information circular. That'll be mailed to all shareholders as well as posted on the website. And at the hotline, we have hired Griffin as a proxy solicitation firm. That's who's handling the hotline. They'll be able to do your proxies for you. And so even those who have shares at brokers, you're going to be able to call the hotline, and Griffin will be able to help you. I think there is even going to be an option for early proxies there if you want to do that. But to give you a little background on the transaction, that we want to make it clear that this transaction is not a takeover or a sellout. Jerry Bachman, my partner, who, together we've really built this company, done the majority, if not all, of the transactions over the last 4 or 5 years. We will both be joining Gold Royalty and continue to run the origination program, continue to source royalties, and I will be joining the board of directors. So as far as Nevada and our operations there, it'll be business as usual, except that we'll have more capital behind us now and be able to do some royalty transactions in Nevada that we just didn't have the capital before. So, and then of course we'll have a new team with Gold Royalties, a very talented team who will also be sourcing royalty opportunities as well as additional M&A transactions. So this transaction was really a joint effort of both companies. It wasn't an unsolicited takeover by Gold Royalty, Really, in the past couple of years, we've seen an emergence of so many new royalty companies, and especially in the junior space. And as a result, the royalty business has gotten much more competitive. And the prices being paid for royalties today exceeds the value that the market is currently placing on our assets. So, for us to look at royalty situations, not only are they getting more competitive, but also, we always had to look at every situation is if we're going to be paying more, and in some cases almost twice what the market is valuing our assets, these need to be a lot better assets. And that's become, increasingly difficult. So given these market conditions, and the board of Ely decided last fall to start looking at strategic alternatives. That included looking at companies that we might buy, smaller companies, and companies that we might merge with, larger companies. It was really only a matter of time with the market valuing our excellent Nevada assets at 0.85 to 0.9 times net asset value, with the major companies trading at, and even mid-tiers trading at 1.8 to 2.2 times net asset value, that this was going to happen. And we chose to be proactive in this. We actually were talking with Gold Royalty prior to their IPO last fall. So we did really run through a process. We had a special committee. We talked to quite a few companies, and we really felt that in the end, this was the best way for shareholders, both at Ely Gold and Gold Royalty now, to benefit from a very synergistic combination. So, a bit of background on Gold Royalty, that they and their IPO was very successful. They went out in March to raise $30 million. They had to increase that to 60, and then again in 90 due to demand. And that's being reflected. Those shareholders were told that the business model for Gold Royalty would be to not only purchase royalties, but to do accretive acquisitions. And that's exactly what this Ely Gold transaction is for them. And while initially we've had some shareholders said, geez, we may be sold out too cheap. First of all, as I said, we're not selling out. We're just we're Ely shareholders who end up with very close to 50% of the combined company. Continue to benefit from our assets as well as the growth of the assets at Gold Royalty. So the underlying assets at Gold Royalty have very well endowed with gold and copper resources, and we're very impressed in the 2 months that we've taken doing due diligence in the new team over there at headed by Alistair Still. That has now switched the business model at Gold Mining to developing these assets. So we think there's going to be a lot of good news coming out of the underlying asset development that the Gold Royalty royalties are based on. So the and really the hidden story in this is that what David and I are putting together is a platform here with two talented teams to acquire royalties, and an excellent platform for further consolidation. And we think there will be further consolidation within this space. And the music has started, as David says, and we chose to grab the first chair. We're just overall very excited about it. So with that, I think if I can manage the slide here, I'm just going to show you how this deal works. Oops, I went too far. Okay. The tender offer itself, as you can see on this slide on the left, it is a cash and stock offer, and the cash portion is based on $1.46 per share. This is Canadian, and I'm speaking only in Canadian here. And the stock portion is based on 2.245 shares of Gold Royalty. So what you will have is two options to take all stock or all cash. And what I've done here is put together a little scenario, and you can see, because at the top, there's a maximum amount of cash, which is 84 million. And then there's also at the bottom a maximum amount of stock of 41,455,194. That odd number of stock is because that's right where if that much stock gets issued, it'll be 50.5 approximately Gold Royalty and 49.5 for Ely shareholders. And of course, the reason that we wanted to do this, and so thus the cash portion in here, is that we want Gold Royalty to be the surviving company with the New York Stock Exchange listing. Last week, they were included into the GDXJ. So a lot of the things that we had as goals to do this year at Ely, we're accomplishing through this merger. So you can kind of see there that we have a sweet spot in this deal between 16 and 28% of the if between 16 and 28% choose the all cash option, everyone gets exactly what they want, all cash and all stock those were elected. Now, as it grows above 28% cash, we have to start allocating. We will have hit the 84 million threshold. And so you start to, your cash starts to get reduced. And I haven't gone through the whole thing, but I put enough here so I think you can get a feel for it, that, you go from all cash at $1.46. If it's 50-50, then it's 84-cent cash and 0.1041 GROI shares for the all cash recipients. And of course, all stock for the all stock recipients. And then that scales up that if 100% choose the all cash option, it's 42-cent cash and 0.1745 GROI shares. Likewise, below 16%, that's the point at which the stock maximum has been hit. And so anything there, you can see at 10%, it's 9 cents a share in cash. And then the GROI stocks for the all stock recipients. And at 100%, 0% cash, if nobody chooses the cash, then it would be 22 cents a share cash and 0.2071 GROI shares. So again, you don't have to do anything right away. You can kind of watch the stocks, and that's very important when you make, because the market really does like this transaction. I think, and so for those that think that maybe this was too low a price, we really were always thinking that this combination would be re-rated in the market. And that's what we are indeed seeing today. At the closing price, this transaction was structured at a price of $4.72 for Gold Royalty. It does just trade on the New York, so that is a U.S. price, and it can be confusing here because you're going back and forth from $1.46 Canadian and then the GROI trading in only in the U.S. But at yesterday's close of 667 for the all stock option, the exchange ratio 0.245, using a Canadian dollar exchange ratio of 1.227, and you can get that exchange ratio right off the front page of Kitco down at towards the bottom on a daily basis. So it's just a matter of multiplying the GROI stock price 6.67 times the all stock ratio 0.245 times the Canadian exchange 1.227. That gives an implied value on yesterday's close of over $2.01 per share. And what would be about a 66% implied spread there. So we think that that the Ely represents a great value in here because this is a very friendly deal, and we expect it to go forward. So I hope this helps everybody to kind of fully understand that. With that, I'm going to I'm going to give this over to David and let him tell the story that that he's really engineered here and put together, and that we're just very excited to be a part of. David?
Trey, you're far too modest. I think we put this together hand in hand, and we've been working really together since last fall. And I'm so delighted that you're going to be joining the board of Gold Royalty, and that you and Jerry are going to stay on to run the generative program. Just as a matter of housekeeping, Trey, are you able to drive the slide deck? I'm not sure I can.
Yeah, you should be able to, but down at the bottom, but I can, sure.
Okay, great. If we go to slide number 4, then maybe what I'll do is take a little step back, and what I wanted to reassure all the shareholders we have on the phone today, and I can see they're coming from all over the world, so I'm delighted that you've taken the time. I know some of you are in inconvenient time zones relative to where we're presenting, so thank you for taking time in your evening in Europe or Asia or wherever you are. But I wanted to talk a little bit about the asset class of gold and the royalty model, and why I think you're really well positioned to enjoy a bull run in the gold space. On the gold side, the dynamic that's really behind what's happening in the gold sector is that the industry has underinvested in exploration and development over the last 6 or 7 years. And as a result, we've seen a 40% decline in global gold reserves from peak levels 7 years ago. And we've seen peak mine production. And so we're likely to see a steady decline in mine production for the foreseeable future. And that means the industry is going to have to put a wave of new capital back into development and exploration to replace depleting reserves and production. So the pendulum has swung too far. And the industry was rightfully focused on harvesting returns from their existing operations, deleveraging. The industry is at net zero debt. I've been in the business for over 30 years. I've never seen balance sheets as strong as they are right now. So the industry is extremely well positioned financially to reinvest back into exploration and development to replace depleting reserves. And they're going to have to do so out of an existential necessity. The industry is quite literally dying every day as they pull ounces out of the ground. They are generating strong margins and returns and free cash flow and paying dividends and doing all the good things that businesses should be doing, except mining businesses by definition are a collection of finite life assets. And if you're not reinvesting back in the ground, you're dying a little bit every day. Why is that important for the royalty space? Well, because as the developers and producers start to reinvest back in exploration and development, they need capital. And royalty companies have always been an extremely important part of the ecosystem when it's come to the development cycle. And so we provided a meaningful source of capital to the explorers and developers at a much cheaper cost than they could otherwise access themselves. Over my career, I've been in the business for over 30 years. I've been involved in the development of 15 mines and operated countless more of those. And many, many times I've accessed capital markets to build mines through the streamers and royalty companies because they can access capital much more cheaply. And so as we're getting into that development cycle again, as the industry, both on the base and precious side, start to reinvest back into exploration development, they're going to need access to the capital we can access much more cheaply. Now, this is an arbitrage game, which means we access capital more cheaply and we lend it off to the developers and explorers and take back royalties at a higher cost, and we generate returns for our shareholders in doing that. But we want to keep our cost of capital as low as possible. And the way to achieve that is by scale, by being big enough to attract investors, generalist investors into our name. And that's why we're combining today, is this will afford us an opportunity, as Trey said, to access capital much more cheaply than we could do on our own, because it creates a significant market cap company. It starts to attract the generalist investors that are looking for liquidity to come in and out of names. And so you're well positioned. I think we're in for a bull run, given that dynamic and supply that I was talking about, and the incessant demand that we're seeing in the gold space as a result of low interest rates and quantitative easing. But if you're going to buy into the gold space, I would argue the best place for you to be is in royalty companies, because they're the best of all worlds. They provide leverage to the gold price and leverage to exploration success. You can buy the gold ETF, and the gold ETF gives you that exposure to the gold price, but what it doesn't give you is the exploration upside that our operators realize as they explore out their properties and grow their deposits geologically. We afford you that by having that top line exposure to revenue. You could also buy the gold operating equities. You could buy the Newmonts and the Barricks and the Agnico Eagles. And certainly these are high quality names, very liquid names. But what you're going to have in buying those names is exposure to the downside risk associated with operating costs and capital cost inflation. And so you don't get that in a royalty company. You don't get that risk because it's all top line. We take a fixed percentage of the revenue, and regardless of what happens to operating capital costs, our revenue component stays the same, or it grows with the gold price, and it grows with exploration success. So it really is the best. It provides you optimum leverage to the gold price, optimum leverage to exploration success. And what you're looking for in the royalty companies is scale and quality of the portfolio. And without doubt, our combined portfolio with 100 royalties focused on the Americas gives you low political risk with a pipeline of operating in development and later stage exploration opportunities with significant mineral endowments. Together, we have the largest mineral endowment of any of the smaller cap royalty companies. We also have the best liquidity, best balance sheet, lowest debt. We're extremely well positioned on a combined basis to continue to drive down our cost of capital and be competitive as we add royalty opportunities into our pipeline. And the management team, I think, is a key competitive distinction. What I liked about Ely, in addition to the royalty portfolio, which brings us from about 18 royalties on a standalone basis in gold royalty to 100 royalties on a combined basis, is that generative model that Trey talked about, that Trey and Jerry have developed over the last 5 or 6 years, where the vast majority of the royalties, beyond the ones that are operating and near operation, the vast majority of the royalties in their portfolio, they generated through their exploration staking program. And that generative model was a significant appeal to us because it's not an element that we have within our group. We have a very experienced operating and mine development group. Collectively, we have over 275 years of mine operating and development experience within our board and management, which I think is a key distinguishing factor relative to our peers in the space. Many of our peers are being run by financial engineers. And as you'll see a little later on, we're run by people that have actually operated and built mines. Why that's an important distinction is because we have a clear-eyed view of the underlying risk of developing and operating mines. We understand how the developers that we're going to be partnering with and the operators that we're going to be partnering with think. And we understand the risks that they're facing. So when we do due diligence on these opportunities, we have a key competitive advantage relative to our peers. And the other thing is, given how vast our experience is within that management board, it gives us unparalleled access to opportunities on a bilateral basis. We don't want to be competing for royalties in cattle calls where you have many companies competing for royalties. Those prices tend to get bid up. What we want to do is get into royalty opportunities before they become available to the general market and get them much more cost competitively and allocate our capital expecting to get double-digit rates of return. And so that's the value proposition that we bring on a combined basis to Gold Royalty and Ely as we contemplate the merger over the next couple of months. Trey, if we could just skip to the next slide, please. So very briefly on the transaction summary, and Trey covered most of this. This is a significant premium deal. Based on the close last Friday, it was a 42% premium to the 30-day volume weighted average price. Since then, Gold Royalty stock has gone up about $2 per share. So as Trey pointed out, the effective price you're being offered is not $1.46 anymore. It's about $2 per share. And what the market is saying is, one, they like this merger, and they're already starting to re-rate our stock. I mean, that's part of the value proposition. Our stock goes up, the cost of capital goes down. So our investment thesis of putting these two companies together is already being realized before we've actually consummated the deal. And so the market is really giving this a ringing endorsement. And the other way of looking at this is our stock closed yesterday, Gold Royalties is $6.67 per share. Effectively, Ely shareholders are going to get our stock at about a $2 per share discount as a result of Trey fixing this exchange ratio of 0.245. And so it's a tremendous premium to the shareholders of Ely. But the market, in spite of that, is saying this is a great deal. We're really behind this. And you've seen almost a 50% increase in the share price of Gold Royalty since we announced this deal. And you're enjoying that upside as Ely shareholders because you've locked in the exchange ratio. Trey, for the next slide. This just gives you a sense of what the combined company looks like, what the shareholder base looks like. This is being endorsed by nearly 30% on a formal basis of Ely shareholders, including Eric Sprott. Eric has locked up his shares. He's going to be voting in favor of this. Eric has obviously been a prolific investor in the mining equity space, has done extremely well. He very much subscribes to the re-rate thesis that we've been talking about, and obviously he's enjoying that upside. He's looking very, very smart today. He's going to still be a very meaningful shareholder. Gold Mining, our parent company, is still going to maintain a significant stake. They're a long-term shareholder. They're here for the duration. They're here for the significant re-rate that we think we're going to realize over time. And obviously, this is a symbiotic relationship because 17 of our 18 royalties are on their projects or development stage projects. And as Alistair Still, the new CEO of Gold Mining, pivots towards actually developing these assets and de-risking them, there's a lot of organic growth and re-rating opportunities within that portfolio. And by extension, we're going to realize a re-rate within the new Gold Royalty portfolio as well. So there's a significant amount of upside inherent in that portfolio that Ely and Gold Royalty shareholders are going to realize on a combined basis. And you can see our balance sheet, very, very strong. I'll talk about that relative to our peers in a moment, but we have no debt. We're going to have pro forma somewhere between $30 to $40 million in cash, depending on how shareholders elect to receive their consideration, whether it's in stock or shares or stock and cash. So we will have still a lot of ammunition to go out and continue to grow our portfolio, royalty portfolio within the combined entity. Next slide, please, Trey. So Trey, actually, I'll hand it back to Trey. You get to hear from him again to talk through the combined portfolio and why he's excited about this combination.
Yeah, let me back up on that last slide too for just a second, because we think that clearly as this if Gold Royalty stock continues to perform, obviously we're going to go a much lower percentage of people wanting the all cash at $1.46 if they can get $2 worth of stock. And so as that, I didn't put it on my initial slide, but the difference is if, it will be somewhere when you get down below that 28% level of cash, it reduces that cash below the 84 million maximum. So, every dollar then goes back into the treasury. And the net effect, if give you an idea, if 100% took all stock, then that would increase the treasury by another $30 to $35 million. So, and while we don't think that'll be 100%, again, we think that with this performance, we're probably going to see that treasury increase substantially coming out of the gate. The assets, I'm not going to jump too much. I want to be sure we can get to Q&A, but of course, this combined grouping. I'll talk first to extend out on what David was saying about the underlying Gold Royalty assets and Alistair Still. This is a big change. Gold Mining spent the last 10 years buying these assets at the bottom of the market. As we say, they are very well endowed and will be coming out here over time as Alistair is working very hard to update resources and stuff that where we can really talk specifics there. But Alistair Still is, I am just very impressed. The amount of work we've gotten done through the due diligence phase of this, as far as some resource updates, and if you look at his resume, he was brought in March. He was a former VP of development for Newmont, as well as stints with Kinross, Placer Dome, Agnico Eagle. I'm leaving one out, but so very, very talented, very, very well connected. And so we have very high confidence that, these assets are going to be pushed forward. And it's only going to take one or two of those changing hands to make a huge difference in the way they're perceived in the portfolio. Of course, combined, we'll have our 4 producing royalties at the 2 at Jarrett Canyon. We're looking for upgrades there after First Majestic just recently purchased that. The Isabella Pearl with Fortitude. We have that small royalty there, but very key. We have a second royalty on all the expansion ground, which they're currently drilling. They're currently permitting a larger leach pad space there, and they believe they've found the extension of the Isabella Pearl on our other royalty ground where we have a 2.5% NSR. Then, of course, in the near-term production profile, looking out, at Corp is building that 300 million ton leach pad at Rochester, where the Lincoln Hill ore will be processed. Our claims at Marigold under SSR Mining will be coming into production next year. Walbridge Mining continues to make big strides in pushing that resource, initial resource, maiden resource that they'll be putting out later this year. Fiore and Gold Standard both working towards production at Railroad and Gold Rock. So a very exciting portfolio there. And then, of course, all of our development stage royalties, as a lot of a couple of the key names in there of projects where, Jerry's just worked so hard to, and is so good at not only identifying these properties through staking, but then putting the deals together to consolidate these claim packages, like the Tonopah West project that's being explored by BlackRock Silver. I believe they still need to pay another couple $1 million on that over the next couple of years to us, or 3 years, and we'll retain a 3% royalty there. Contact Gold is making great strides at our Green Springs property. All in all, I think right now we've got in that exploration portfolio probably 15 to 16 that have active drill programs on them. So, we're putting these programs together. We're not going out and buying these exploration royalties that are just kind of sitting there static. As we're originating these and putting, and Jerry is going out and finding them, we're finding buyers for them. Because these deals are so fresh in the sale or option process, they're getting work. They're not just royalties at a expiration that's been sitting there, in the back of somebody's portfolio. So very exciting. As I said, we'll continue to manage that on a going forward basis. So I'll give it back to David here and move to the next slide. Talk about where all these royalties are.
Okay. Trey, thanks, Trey. I finally figured out how to navigate these slides now.
Oh, good.
I don't need more orders at you anymore. Anyway, so this just gives you a sense of the geographic spread here. It is an America's focused and precious metal focused company. A lot of the streamers and royalty players that have come into the space the last couple of years have a lot more political risk. And frankly, they don't have the precious metal focus that we do. Quite often they have royalties on some exotic minerals and they try to pass them off as precious metals, but they're frankly not. We will continue to stay focused on precious metals, continue to focus on low political risk jurisdictions and on strong management teams that operate well within those jurisdictions. It's not to say that we won't diversify out of the Americas, but if we do, I can assure you it'll be in a jurisdiction that accepts mining and with a management team that has a track record of success in operating in that jurisdiction. And you can see the spread geographically, but also the many royalties that we have at every stage of the life cycle of a mine. We have quite an active pipeline. We're very, very excited about that. So really, to kind of go back to the benefit to Gold Royalty shareholders, to those that are on the phone, thank you again for your confidence in our IPO. We raised, as Trey said, $90 million back in March on the 18 royalties that we currently have. And what we provided is an opportunity to daylight value for those shareholders through the royalty structure. And this will enhance that re-rating opportunity on a combined basis as we go from 18 to 100 royalties, gives us increased liquidity in our stock, lower cost of capital. And the benefit to shareholders of Ely, as I mentioned, is a significant premium, which is well past 42% now, given how Gold Royalty shareholders have, Gold Royalty stock has behaved since the announcement of the merger. It's up almost $2 US per share, or almost 50%. So a very dramatic increase, which again, Ely shareholders are enjoying fully on the upside because of the locked-in exchange ratio. And again, on a combined basis, as Trey said, this makes us much more competitive when we're looking at royalty opportunities. To the extent we do compete in formal processes, we will be able to use our enhanced currency to provide a better return proposition for our shareholders and better prices for the assets we're competing for. How does this position us relative to our peers? We are at top of the class in terms of the number of royalties within our portfolio. And I would argue that we have the highest quality portfolio, both in terms of the various assets we have at every stage of the life cycle, and the quality of the resource. The mineral endowment far exceeds any of our peers here. It's dramatic and significant, particularly when you consider underlying the gold royalty portfolio is 26 million ounces of gold resource, or 31 million ounces on a gold equivalent basis. That's significant, and that provides significant exposure to our shareholders, both on an individual basis and a combined basis, as we consummate this merger. We entered Gold Royalty, this transaction, with $90 million US on the balance sheet. Obviously, some of that will go to Ely shareholders in the form of partial cash consideration. So we're going to end up somewhere between, roughly $30 to $70 million on a post-merger basis, depending on what Ely shareholders elect in terms of the form of consideration. So a very, very strong balance sheet with no debt. And the ability to access capital much more cheaply as we look at vastly expanding our business over time. So I'm very excited about the opportunities this will afford us on a combined basis. The re-rate, let's talk about that. On an individual basis, Gold Royalty and Ely are trading somewhere between 0.9 and 1 times the underlying value of our business, what we call net asset value. That's what the market affords us. Mature royalty companies, ones that have been around for a while, typically trade at 1.5 to 2 times net asset value. The large cap ones, even beyond that. So what we're saying is, on a combined basis, we compare extremely well to the peers that you're seeing on this chart on the right, and we see 50 to 100% upside in our stock price on a combined basis as the market re-rates our story. And again, we compare very favorably in terms of the number of royalties, the stages of each of our royalties, the quality of the mineral endowment and the quantity of the mineral endowment underlying this, the strength of our balance sheet, the strength of our management team. There's really no reason that we shouldn't be trading at 1.5 to 2 times net asset value as we combine forces. That's the potential upside without us doing anything other than just better marketing the story on a combined basis and realizing that value. Obviously, we're going to be allocating capital, expecting to get double-digit rates of return on new opportunities, which will only further cement this re-rate opportunity for the combined shareholders. So we're very, very excited about combining forces and what this means for shareholders on a combined basis as we realize that re-rate potential. And the management of the board, you can see we've got Trey there. Trey makes it a better looking board and a smarter board, and also a more experienced board on a combined basis, over 275 years of combined mining sector experience. And again, the majority of this group comes from a mine operation and development perspective. I spent over 30 years running mining companies, building mines. Alan Hare, who was my successor at Hudbay, base metal company I ran for about 6 years and was my chief operating officer, 35 years as a metallurgical engineer and a prolific mine builder, largely building mines in northern Canada, but also he built one of the largest copper projects in Peru, which is a cornerstone asset for Hudbay, the Constancia project, which we actually sold a precious metal stream on. We realized a $750 million check on that stream, which helped us build a generational asset. So we're not just looking at gold deposits, we're looking at base metal deposits that have precious metal components in them as potential royalty opportunities going forward. And we're really going to be well positioned on a combined basis to compete for those. Alistair Still, Trey talked about him a little earlier on. Not only is he the Director of Technical Services for Gold Royalty, but he's also the CEO of our parent company, Gold Mining. And Alistair has 25 plus years of experience in operations, mine development in North America and down in Argentina. He helped run our corporate development function at Gold Corp. It was an absolute prerequisite for me to come over to Gold Royalty, have Alistair come with me, because I understood the importance of pivoting our parent company, Gold Mining, from just inventorying those vast amounts of resources to actually developing them. And Alistair is a very, very capable operator, mine developer. He's a geologist by training. So again, brings significant technical experience to the table, both for Gold Royalty and Gold Mining. Warren Gilman, it runs Queen's Road Capital, which is Li Ka-shing's natural resource fund out of Hong Kong. Warren has a technical background as well, but he's been in the investment banking side, mining for over 30 years, and now on the buy side. He's also a cornerstone investor in Gold Royalty, and continues to support and will continue to support the combined company as we realize the merger. And then finally, the guy I want to mention here is Ian Telfer. Ian invented the streaming business. 15 years ago, he created Wheaton Precious Metals by spinning out Wheaton from Gold Corp, my old company, with some royalties on Gold Corp's assets. And Wheaton Precious Metals took that initial mineral endowment and grew the business to the second largest streaming and royalty company in the world by market cap. They're well north of $20 billion market cap. Started very modestly 15 years ago with an idea. And Ian has come here to replicate that model for Gold Royalty. We're doing exactly the same thing. We've spun it out from Gold Mining with royalties on a significant mineral endowment. Now it's our job to diversify that portfolio, grow it beyond that initial mineral endowment, and grow to a much larger market cap company. It's our objective to make this a multi-billion-dollar streaming and royalty company by market cap within the next several years, both through M&A, like we're doing today, and also acquiring royalties, expecting to get rates of return on the capital we're allocating. So you're really at the ground floor of what we think is going to be an exciting large cap royalty company over time. And as you can see within our management and board, we're well equipped to do that with the experience that's brought to the table and the diversity of talent and skills and operating platforms that we have within the respective companies. So just to kind of wrap things up and then invite Q&A, and I can see there's quite a lot of questions queued up here, and I'm sure Joanne is going to lead us through this, but what you're buying into is really the beginning of a re-rate opportunity. We see 50 to 100% upside on this existing portfolio without having to do any other M&A as we get re-rated in the marketplace, as we achieve the scale through our combined efforts. And then as we start to allocate capital, expecting to get double-digit rates of return with a lower cost of capital because of that re-rate that we expect to realize over the coming months and years. We expect to grow our business significantly beyond this and be a multi-billion-dollar player in the space over the next several years as we continue to grow our business through M&A and individual royalty acquisitions. So thank you for your kind attention this morning. We're very, very excited. Trey and I have been getting to know each other over the last 6 or 7 months. Really, it was back last November when we started chatting with each other prior to the IPO. And we spent a lot of time looking at each other's assets, asking the kind of probing questions you should be asking when you're looking at either acquiring a company or merging a company or acquiring individual assets. You want to do extensive due diligence. You want to know what you're buying. You want to make sure you're getting good value in each other. You're realizing your re-rate on a combined basis is a win-win type of opportunity. And that's exactly what we're presenting to you, Ely shareholders, and to the Gold Royalty shareholders that are on this phone today as well. Thank you for your attention this morning.
And gentlemen, thank you so much for that information. This is why these events exist, so our investor community can touch base directly with the voices behind the company. We have quite a roster of questions coming in naturally. It's a very interesting and a lot of moving parts happening with this event that's taking place. So I'll start off by asking very clearly here for either of you, if prices are not competitive, how does more capital help you in creating shareholder value for Ely shareholders?
What?
The question reads, if prices are not competitive, how does more capital help you creating shareholder value for Ely shareholders?
So what prices are, if prices are not competitive.
I think that question is, I would assume what they meant is if prices are so competitive to purchase new royalties, how does having that lower cost of capital help you? Well, again, keep in mind that as I pointed out and have been pointing out every time I do a presentation, our assets are currently trading at about 0.9 times NAV. That's a little higher since the transaction. Maybe we're maybe at just about 1 times. What we think is, and we are already seeing, is a re-rating here, so that with our assets combined in this combined entity, as that re-rate happens, which certainly has already started, the combined assets are going to be trading at closer to 1.2, 1.3, maybe 1.4 times NAV. As David said, we think we can get it to 1.5 to 2, so that then we are competitive on that those royalties that are too expensive for us to purchase now at Ely without diluting our current assets. That's a very important point, is that if we pay more 1.5 times NAV, that better be better assets than we have in our portfolio now, because we're going to dilute our assets that are trading in the market at 0.9 times NAV. So I think that the lower cost of capital will help that, and the lower cost of capital is based on that higher multiple of net asset value.
Great. Thank you very much for that, Trey. Next question reads, when will the arrangement become effective, and is it shortly after shareholders' approval?
I'll go ahead and take that. The process is basically, it does need court approval, the plan of arrangement in British Columbia. So what we'll be doing is, prior to the meeting, the vote, we'll go before a judge, and he'll look at the plan of arrangement. He'll ask all his questions and go through the whole process, make sure he doesn't have any issues, that the court doesn't have any issues. And then they approve it subject to the vote. And then after the vote, we basically have to go back for the judge to sign off. So it could be the next day. It's Canada in late August, so he could be fishing, on a fishing trip. But I think for the most part, it's just we don't go back to court again. We just get that final sign off from the decree from the judge.
Great, thank you.
I don't want to take it for granted, but generally those court approvals are quite perfunctory as long as the shareholders approve, and deals legally structured. It's a fairly perfunctory process, and happens very, very quickly. So we're quite confident that if Ely shareholders support this overwhelmingly, as we've heard that they will, the court date will be immediately thereafter.
Great. David, thank you for that addition. I hear due process there. Thank you very much. Let's turn our focus to warrants. We have both back-to-back questions here. How will Ely warrants be treated? And also, of course, ultimately, how will gold royalty warrants be treated?
I'll speak to the Ely warrants, and let me just respond that I threw that slide together very quickly, trying to show the breakdown, and I see that somebody, I did put a decimal point in there where it should be a comma. It is 41,455,191 shares. Not there's. Anyway, so with that cleared up, the Ely warrant holders will have a option, or they always have the option to exercise the warrants and then participate in the all cash or all stock deal. That would require you to exercise, send us the money for the exercise price, and then you would be issued the stock, and we would do that in plenty of time for you to meet the record date. If not, what you will get is a new warrant from Gold Royalty, which will have the same expiration and same terms, and would then just have on the conversion price, the all stock conversion price of 0.245, you would get a reduced number of warrants at an increased gold price, but it would be the equivalent after doing all the complicated math. And rather than switch it back to David, I can tell you that it won't affect the GROY outstanding warrants at all.
Okay. Trey, thank you very much for that. I appreciate it. We have some foundational basic questions coming in. There's a three-parter here. I'll do it one at a time. Question being, will there be a continued Canadian listing?
Yeah, we're actively considering that right now. But that will not prevent you as a Canadian shareholder of owning the stock. I'm Canadian. I live in Vancouver. I own all my Gold Royalty stock in my online account, and it gets translated into Canadian dollars because all my assets are Canadian, and so I'm in the same boat as other Canadian shareholders.
Thank you, David. Great, appreciate that. Next question: will this share exchange allow for a tax-free rollover in Canada or the U.S.?
There will be some, look out for the circular, which will be going out, I would imagine, around mid-July, and we'll have detailed tax guidance on that. Though, Trey, I don't know if you have any more insight. I know enough tax to be dangerous, so I'll be very careful about what I say.
Yeah.
Trey, anything you want to?
Yeah. Let me back up on the warrant thing, because with this tax question coming on. Okay, for the warrants, whether you are U.S. or Canadian, this will be a step-up transaction. So it will be a taxable event based on the fact that it will depend on how you may have or may not have valued the warrants. Most people don't put value on those; they keep the value on the stock when they buy a unit. So that, and I also will point out one other thing on the warrants is that our highest we have a couple million warrants out of 31 million warrants. We have a few million that were issued at higher prices in transaction related, but most of our warrants are exercisable at $1 or less. And of course, with the GROY stock trading this much higher, and we think we'll see a lot of warrants exercised, and then you can take a cash portion for those and both pay off the exercise money, and you will have a tax liability on that. On the warrant step up. So that's all something to consider. One other thing on the warrants is that even the dollar warrants that we issued at our most recent financing have an acceleration clause at $1.60. So all other things being equal, if that acceleration clause will be maintained in the GROY warrants, and as we pointed out, with the implied value today of $2, you would probably get those warrants would probably be called in. I can't speak for what management will do, but generally, once you trade above that warrant price, that's the whole idea, is to get the capital in and force exercise those warrants. So all in all, it's looking like we'll see a lot of warrants exercised. As far as the stock, we know that this deal is structured, and again, it will come out in the final in the circular, but that it'll be a tax-free exchange on the shares for Canadian shareholders. U.S. shareholders, we can't really speak to at this point. We believe it is, but the U.S. tax laws are, it's a rapidly changing landscape there anyway, and so we're just not giving any tax advice on to the U.S. shareholders. That'll be something. Once you have the circular, you'll have to take that to your tax accountant for his advice on that.
Understood and fair enough. Thank you, Trey. Last piece of this question reads, will RSPs and TFSAs have Canadian Gold Royalty Corp to hold without conversions when buying or selling?
Yeah, I don't know if I can answer that question. I'd say please talk to your tax advisor. But I know some of this Gold Royalty stock is held in my kids' RSPs and whatnot. I haven't had a challenge with that, but
Okay.
Over to your tax advisor.
Thank you.
Everybody's circumstances are different, I think.
Understood and fair. Once again, thank you, David. A question, when we're looking at the net asset value of Ely, what is the dollar value or NPV of the Walbridge Fenelon 2% NSR?
Different between the two analysts. I don't know. I know it got changed a bit when they made the decision to not go forward with the small mining, and so it got pushed out as far as obviously we were looking at some near-term cash flow if they went with that. So I believe it's just north of $40 million.
Okay. Great, Trey. Thank you very much for that. Next question. Why is there almost 50% upside to Ely stock if the deal closes? It seems shockingly inefficient, it's commented. Is there anything that investors are missing in this piece?
No, the only thing I would say is we have a very, very dedicated shareholder base at Gold Royalty. They don't lend their stock out. And so the arbiters have not been able to play this. They have not been able to borrow Gold Royalty stock to short. So they could buy Ely. So the gap between the implied bid price and where Ely's currently trading is quite wide as a result.
Okay.
Honestly, and this is not inside information. I've been telling friends and family Ely stock is a screaming buy at these levels because
you can't say that, David.
It is. It's a screaming buy. It's a great company, and given where the implied bid price is, why wouldn't you own Ely stock? You're going to get Gold Royalty stock at a significant discount, given that the fixed exchange ratio, as I pointed out earlier on, if you want to re-up and average down on your Gold Royalty investment, this is a great way to do it. So, anyways. Great.
Let me pick Joanne off the floor here, and walk this back a little bit. Look, I put this slide back up because this is certainly one reason. This is not just a straightforward transaction, and we're striving here to explain it. But this cash and stock, and is it $1.46, or what am I going to get? And so hopefully you can see here that. There's a very good chance that I think it's that if you anything north of 16%, you will get all stock, and even below that, the very worst cases, it would be 22 cents a share in cash, and then the balance in stock. So I think that's one thing, and as we strive to explain this way to shareholders, and with the hotline set up and everything, I think that'll be helpful. I'll piggyback on what David said. Is keep in mind that they had a very successful IPO only in March. And those shareholders bought these Gold Royalty at $5. They did get a warrant in that unit, but they bought at $5, and they bought into this management team, to this concept of consolidation that David says. Points out so well and explains, and other royalty acquisitions, and they've been, here we are June, and they've already done this first major transaction. I mean, you could I think call it transformational. So those shareholders, they're not in a hurry to sell here. I just psychologically I'm speaking, they were waiting for this to happen. So in actuality, those shareholders are buying more shares now. And I would also speak to the fact that beyond the 30-some% that's locked up, as everybody knows, I've always been a very visible and accessible CEO, and so I talk to shareholders all the time. We've got some large groups that have been long-term investors, probably as much as another 15. At least 12 to 15%, I would say, of friendly large blocks that we know is going to vote positive. So, and this is, as I said before, this is not this was a planned deal. It's not something came out of left field for us. There's just very little chance that we feel from the standpoint of the shareholders and everything of this not being approved. So again, I'll just show the slide here and let everybody just come up with their own adverb for buying Ely stock.
Fair enough, Trey. Thank you for that. A very solid question coming in a variety of ways here. When do you expect to initiate dividends, royalty distributions?
Yeah, look, I think integral to any good royalty company that's cash flowing steadily is a good dividend policy. Gold Royalty is still a young company, literally months old, and combining with Ely and getting access to their cash flow gives us a steady source of cash flow. And gives us an opportunity to start contemplating a dividend policy. The other interesting thing about this is, adding Trey and Jerry into the employee role only increases our workforce by 50% from 4 to 6 people. We can run this business at 10 times the size with the same number of people. So it's eminently scalable. Every time we add new cash flow into the portfolio, that goes right to the bottom line, and it affords us an opportunity to consider a steady dividend over time. So we will be looking at that as we grow out our business and some of these late stage development projects come into production and add to our cash flow pile.
Great. Thank you very much for that. There's a question for someone who has a Canadian account only. Will it matter if Gold Royalty is in the U.S.? Would they have to open up a U.S. account?
Gold Royalty is a Canadian company. Just to make that absolutely clear, we are listed exclusively on the NYSE right now, but we're a BC incorporated Canadian-based company in Vancouver. So we're a Canadian company. It doesn't really matter where the company's listed in terms of whether it's a Canadian equity or not. It's a Canadian company.
Okay. Terrific. Thank you, Brendan. That's for it. Both Ely and Gold Royalty share price are going up. If the Ely share price goes up higher than the offered amount, will the offer to Ely go up as well?
The answer to that is no. Everything is set at this point. The cash portion is $1.46. If you choose the cash portion, and again, looking at the screen in all the scenarios where you would get all cash, you will be paid all cash at $1.46. To benefit from the combination of the Gold Royalty stock going up, and if it continues to go up, we could see Ely trade above that $1.46 price. And in that case, we're looking at probably more and more a lower and lower percentage of people taking that all cash. Although I don't know that we'll. We can't predict now exactly how this is going to come out, but if to what we locked in with the $1.46, most importantly, was also that 0.245 exchange ratio. So you're benefiting from the Gold Royalty price increase in Ely shares based on that exchange ratio. Which is set, and thus Ely's implied price increasing with the increase in Gold Royalty stock.
Okay, thank you, Trey. Could you please describe the intended disbursements of the royalty, strictly share price or monthly royalty payments like in the ONG leases?
Expected disbursement of the royalty, strictly share price or monthly royalty payments like ONG leases. Okay, I think maybe I'll interpret this as that, the royalty for us is income into the company. So if to apply this to oil and gas, I would compare it more to the limited partnership, the royalty limited partnerships. This is income for the combined company, what will be Gold Royalty. What we do with that, we're not passing through anything like you see in oil and gas. So we're not pass-through entity. We're a corporation that will take that money and reinvest it as the board sees fit. At one point, that should be in dividends, which would be dispersed out to shareholders. But in the meantime, until that cash flow is solid, those royalty payments would go into the treasury and be used to acquire other royalties.
Okay. Terrific. Thank you for that very much, Trey. Can you please speak to how the combined company expects to compete with similarly sized peers such as Mavericks and Nomad?
Well, look, I think what puts us in a strong competitive position is, again, achieving that scale, getting access to capital much more cheaply by achieving that re-rate. But the other thing that we have to re-emphasize is the experience of the management team and the access that affords us. I mean, many of these people on the board management have run companies, built mines, and they have access to companies of any size in the mining universe. It's a small industry, but we can get access to royalty opportunities that are owned by mining companies of all size, from large cap to smaller scale. We've been involved from across the spectrum, from exploration stage to late stage mature large cap companies. So that access affords us opportunities on a bilateral basis rather than necessarily getting caught up in a competitive process where prices tend to be inflated. So I think that's really what's going to distinguish us. The other thing is, I would say, is what Trey and Jerry bring to the table in terms of the generative program. Generating royalties themselves organically is another significant key competitive advantage that we're going to have. So we're really going to have a broad set of skills, really, understanding how mines are developed and operated, but also this generative program that Trey and Jerry have pioneered over the last 5 or 6 years since they founded LE is going to be a key competitive advantage relative to our peers.
Great. Yeah, and I just add to that, David, that look, Jerry and I, for sure, we know that it's the relationships, especially with Jerry, knowing a lot of the old prospectors. If you look at our track record, a lot of it's come from individual prospectors who have worked with and known Jerry for a long time. So those relationships are so important. So when you look at the depth of the board here and the diversity of different places that they've come from, different backgrounds with different companies, there's just going to be a lot of connections in there. Basically, they know collectively we're going to know a lot of people in a lot of companies, and have the advantage of getting some of those things done without them going into a competitive situation.
Okay. Thank you for that addition, Trey. It's great having both of you center stage. With that in mind, we'd appreciate any comments on what the potential of the combined companies looks like to each of you.
Well, I harken back to that re-rate slide and the potential upside in our multiple on a combined basis by achieving that scale and getting a bigger weighting on the indices, for example, and getting more passive capital. We got included on the GDXJ earlier this week, and that resulted in a significant amount of buying. That gets rebalanced every day. Mm-hmm. So by combining with Ely, we're effectively doubling our size and doubling our share of that index. So we're going to get more index buying, and we're going to get big enough to start to attract some generalist investors that need liquid names. They need a significant amount of market cap in order for them to get in and get out. Mm-hmm. They're loath to participate in smaller companies just because they're concerned about liquidity of their investment and being able to realize and lock in their capital gains. And so this will afford us the opportunity to realize this significant re-rate potential of 50 to 100% from where we're currently trading.
Great.
Yeah, and I would just add to that I mean, this said we've been comparing notes and our kind of visions and aspirations for over 6 months now, and I think we have a very solid, pretty easy vision for this company. First of all, we're combining two very talented teams. And so we've really got two groups, both Jerry and I originating royalties, and we'll continue to source new royalties, and a whole new team sourcing. And we were always limited and knew that we were going to have to grow beyond our comfort zone of Nevada jurisdiction. And of course, we worked into Canada some and had some help with strategic advisors doing that. But we started to look at South America and at Brazil and at other jurisdictions. And we always wonder, as a junior company, smaller as we were and less capitalized, very difficult to go globetrotting chasing royalties. People think it's just, we're just buying a royalty here and a royalty there. Well, you go to West Africa or even places in South America, you don't really know what you're buying. In Nevada, we know what title looks like. We know what, the deeds look like and everything else. But, you all of a sudden, when you go to a new jurisdiction as a junior company, you have to add accountants and lawyers and the like, and infrastructure, and then to really take advantage of that market. And one market we did look at very seriously, and it was Brazil. And let's just take that as an example. I mean, David's the CEO of Great Panther, also, that's operating in Brazil. Amir and Gold Mining has, I think it's 5-6 assets in Brazil. They're part of the Brazil banking organization down there. Just incredible contacts already set up in Brazil, a place that we have a lot of contacts and think there's, going to be tremendous opportunities as new mines are being built in Brazil. So we're getting that expertise and that infrastructure in this to expand it into other areas that we would have had to do at a great expense to our shareholders. So, we've got that. And then I'll also say that, we really think that there is going to be a consolidation with these junior companies. Just too many of them popped up here in the last year and a half, and there's not enough deals to go around. And I think, one at a time, they will be there. You will see consolidation. You saw it around between 2013 and 2016, the last time there was a proliferation of new royalty companies, and you're going to see it again. So we intend to be a big part of that going forward and be the consolidator.
Great. Thank you very much for that, Trey. I know that a well laid out plan has been presented here. There's some breathing room for investors to make some decisions, but there is a great question here that if an Ely shareholder does nothing, for example, does not vote, do they automatically get converted to the Gold Royalty shares after the merger is approved?
That is correct. If you do nothing, if you do not make an election, your election will be considered the all stock option. And you will get either all stock or, again, in that case of if we have more than 85% wanting all stock, you'll get a little bit of cash. But you will be treated, everybody will be treated equally in this from a stock standpoint within the two classes, the all stock election and the all cash election. And depending on how the percentages come out, going back to my little table, is what you'll receive.
Great. Thank you, Trey. Another question here, just for clarification, is there a possibility to request, for example, 50% cash and 50% stock?
As I just said, everybody will be treated equally as all cash and all stock, and the percentages will be based on how that actually comes out in the end. I'll go back to this slide. So the answer is no. You can't make any request. Your only options are all cash or all stock. And this is how you'll be treated. And again, we will, I don't know how much we can disclose in the end, but as I said in my opening, that election doesn't have to be made till August 12th. So I think we should have a fairly good view then of maybe where this thing stands ultimately. And of course, I think you can just make some basic assumptions in that it's going to, if you continue to see gold royalties trading at, plus or minus $7, and the implied value of Ely is over $2, I think most people are going to have a hard time taking a $1.46 cash when they can get $2 worth of stock. But everybody has their own situation, so we'll have to see.
Okay, thank you for that, Trey. Also curious, the Canadian Stock Exchange is known as being one of the most expensive ones in the world for European investors. The curiosity here is, are you going to be listed in Europe as well to make sure it's more accessible?
We're not currently contemplating that, but again, as we achieve scale, we'll look at ways to improve liquidity in our stock, but right now it's not in the cards.
Okay, terrific. I appreciate that very much.
I might add, though, that the Frankfurt listing is very easy to achieve. It's not nearly what the TSX is that I know David's looking at. But so if that makes a difference, it's certainly everything. And I think David would agree to this. Anything that helps the liquidity of the stock and the shareholders, we're for. Can't get it all done at once, but we've got time here before this thing closes to consider everything.
Okay, terrific. Thank you for that. Appreciate it. We have time just for a couple more questions before we wrap up, gentlemen. Obviously, this has been in the works for some time, and the news comes forward for the public to get an insight as to where things are going. What about the timeline, the next, say, 6 months or so, the key things that we should be watching for?
Well, I mean, first milestone will be the circular, which will get mailed in July, and that'll give you all the details you're looking for in terms of your options, potential tax implications of what you decide to do. That'll be laid out in the circular, the timing to that, the shareholder vote. Please do come and vote. Mm-hmm. I think it's extremely important. Don't disenfranchise yourself. I think it's extremely important you come to the shareholders meeting and vote your support for this deal. And then the court arrangement, and then the integration of our businesses and the re-rating opportunity that will afford. Once this becomes real, and we start to tell our combined story, Trey and I together out on the road, I think we will realize that re-rate over time. And I think you'll be able to enjoy that upside over the coming months and years. And we haven't stopped running our businesses. Both Trey and I are individually still looking at royalty opportunities. Mm-hmm. They're not going to be nearly as material as this transaction, but I would expect to see continued news flow even during this interim period on a number of other royalty opportunities. Trey just added one last week that brought us from 99 to 100 royalties on a combined basis. Mm-hmm. So we're not stopping running our business while this merger is taking effect.
Great, thank you. Any thoughts from you as well, Trey, on that point?
No, I think Dave's covered that. But I do see a question come up here. Let me just address it while I have this slide up. Bob asks if GROY share price drops dramatically, say to $2 US, do shareholders still receive $1.46 Canadian cash? The answer to that is yes and no. Yes, the $1.46 is locked in, and that money is in the bank. It's in the treasury at Gold Royalties. So the 84 million maximum, but again, if the stock were to fall $2, just like on my slide here where I'm saying that if the stock's at $7, it's more likely that you're going to be down in this range somewhere with that ratio. Mm-hmm. If the stock were to fall to $2, you most likely would be up here in this territory. So at a worst case, if everyone choose all cash, yes, there's $1.46 worth of cash there. But when you split it up between all the shareholders, and if you divide the 84 million between the 200 million shareholders, that's where you come up with 42-cent cash and then 0.1745 of GROY shares.
Okay.
The only thing I would add is, I know that's a hypothetical example, but as Trey correctly pointed out, we just IPO'd at $5 US in March. We're very closely held. 48% of Gold Royalty stock is owned by Gold Mining. The rest of them are held by strategic institutions, like, for example, Li Ka-shing's fund, Queens Road Capital out of Hong Kong. They're in here for the long term, and they're very, very excited by what we're trying to do here in terms of consolidating the space, adding to our royalty portfolio. They're not sellers. And that was evidenced by the fact that the arbitrage players in the space have not been able to play. They haven't been able to get any gold royalty stock or borrow it in order to short it, to buy Ely stock and close that gap between the implied bid and current Ely share price. So this stock isn't coming out of weak hands. These are very, very strong hands that are in our shareholder base. We had an institutional and retail order book of $140 million in our IPO. We ended up tripling the size of our IPO from $30 to $90 million. There's still a lot of latent demand for this stock, which is why the shares have performed so exceptionally well post the IPO, well above the IPO price. And not just for the shares, but our warrants as well, because we issued units, a share and a half warrant per unit on the IPO. And on a combined basis, our shareholders are up nearly 40% since the IPO. So they've done very well, very strong hands. So I'm very, very pleased with our shareholder base.
Yeah, I'd add to that and I guess probably again just repeating what David said a different way, is that since the offering, and of course we've been watching it very closely because we were talking before the IPO, we were so impressed at the success of the IPO and the fact that what the market thought about this concept, this management team, these assets. The stock has not traded below the IPO price since the IPO, and that's been in arguably a fairly challenging market. And I don't think there's many royalty companies out there of the new ones that have come on the scene that can say that.
Great stuff. Thank you for that addition, Trey. We're approaching almost an hour and a half here, a very interactive back and forth. Big news, a lot of moving parts, but I'm very grateful that we had the chance to work with you and just really hear some of the inside thinking and where the vision's going. And this has been one of our most active Q&A sessions from around the world. So I'd like to thank David and Trey for all you brought to the table, a very well clearly laid out plan. And obviously some decisions to be made by investors, but well informed. Gentlemen, thank you both for your time today. Very much appreciated.
Thank you.
Terrific.
Thank you, Mark. And thanks everybody for tuning in today. I hope you got a little more insight and some questions answered. And for the Ely shareholders, be assured, we're going to be here. We're going to be doing more of these, answering questions as we go along on this platform. We do have the hotline set up now with Griffin, so you can call into there at any time to get questions answered, and ultimately you'll be able to make your election and your proxies right through there. So we're trying to make this uncomplicate this deal for everybody and make it as smooth as possible. But we're very excited about it. We think this is going to be a very strong combination. Jerry's very excited to go and do some bigger deals in Nevada than he's ever done before. And so again, thank you for tuning in, and be assured we'll be there to answer every question you have.
Great stuff. Trey, David, thank you once again for all the time and insight. I thank everyone from around the world who's been tuning in and offering questions. I look forward to watching where things go, as does our audience. So gentlemen, thank you once again and best of luck.